Welcome to another S&P 500 analysis. Today is December 10, 2022. What you are looking at the screen is a 1-minute chart of the E-mini S&P 500 future, the ES. And what I want to highlight here is right here at 8:30, soon as after the PPI was released and showed that it is hotter or higher than the market expected, it dropped 60 points in 1 minute. And that is a dramatic drop. And also it was up 20 points before the PPI was released. So as you can see, it dropped and then recovered a little bit. Then after the opening bell, it is trying to recover back all the losses caused by the PPI, but it never got there. Then during the lunch hour, the market started to fade. Then after the lunch hour, then the market started to consolidate here and try to build a base here. Then 30 minutes before the close, it started to sell off again, and it sold it off down to near the low caused by the PPI. So here are the numbers that caused all the damage here. You can see all the actual number was higher than what the market was expecting. So that is what caused this 60-point drop in 1 minute. Now, will this type of price action occur when we see the CPI release this coming Tuesday? Because this coming Tuesday at 8:30 in the morning, an hour before the market open, we'll get the latest release of the CPI. And also the same day, the Fed will start the December FOMC meeting. And then the following day on Wednesday at 2 p.m. New York time, the Fed will announce the latest rate increase. So if we get a hotter CPI than what the market expects, will the Fed also change its tune about moderating the rate hike policy? And would they switch from, they've been telling the market to expect more of a 50 basis point increase back to a 75 basis point increase? So we'll see. And we'll take a look at that and also look at some of the price scenario in this video to see how we could prepare for the possibility of a drastic price move like here that we saw on Friday after the PPI. Stay tuned. Looking at this weekly chart of the S&P 500, the range for last week was 134 points. It lost a little bit over 137 points, or 3 1/3%. It booked this one-time framing up and closed the week with a lower low, so that pushed it down to a one-time framing down. And it did close below this 40-week moving average, but it is still above this 10-week moving average, and it is still in this lower low, lower high pattern. Let's take a look at the market sentiment, the market internals, and also the 10-year yield, the US dollar, along with crude oil, silver, and gold market before we go and take a look at a more detailed analysis of the price action for the S&P 500 along with the other major market indexes. And looking at this sentiment chart here, you can see the VIX is coming up a little bit again. It's near the 23 level. It closed on Friday at 22.83. And the put-call ratio is also getting back close to 1 here. So definitely the market participants are getting a little bit more fearful and risk off. And as a matter of fact, probably getting on a little bit more bearish and hedging a little bit more and buying a little bit more on the put side. And for the up-down volume ratio, you can see only on Thursday, we actually saw a positive up-down volume ratio. Or the other day, it is favored the down volume. And as a matter of fact, on Monday, I believe this is like 17-1 or 15-1 in favor of the downside. And also the advanced decline, the daily advanced decline also show a bond market decline. You notice that throughout the week, except for Wednesday and Thursday. Thursday was actually a little bit positive, maybe more advancing issue than declining issue, and it's pretty much a wash on Wednesday. But looking at Monday, Tuesday, and Friday, it was pretty much of a broad-based market decline with more than 1,000 more declining issue than advancing issue, and on Monday, it was more than 2,000 more declining issue than advancing issues. And the new high, new low we see in the New York Stock Exchange, the new low is still outnumbered new high on Friday by amount of 22. See that the number of new high hitting on a daily basis is less than 50 or so. Also, the new low is getting up near the 100 or more. And on this cumulative AD line for the New York Stock Exchange, you can see that it is coming down, although it did not show any of negative divergence, but it is coming down with the index. And here looking at the NASDAQ 100, the NASDAQ 100 index has also been coming down. And on Friday, it lost a little bit over 0.6% and was down a little bit over 74 points. But similarly to the New York Stock Exchange, the up-down volume ratio was pretty negative for the week, and also the advanced decline showed that it was a broad market decline on all those down days throughout the week. And for the new high, new low, the NASDAQ market continued to show more new low than new high. On Friday, there was 177 more new 52-week low than new 52-week high. And also the cumulative AD line has been coming down along with the index as well. It is showing a little bit of a slight negative divergence for the NASDAQ market cumulative AD line. Now looking at this long-term 10-year yield chart here, this is a 10-year weekly chart. As you can see, it could come down to this 3.248% level, and we saw that back in 2018 as well. So we'll see what the coming week will bring. Would it, with the latest FOMC announcement, would it pushes the yield come back down to this 3.24 area, or would it push up to this 3.75 area? And if we take a look at the daily, on this daily chart of the 10-year yield, you can see that on Friday and also on Thursday it was coming up a little bit. Maybe this is the anticipation of the coming FOMC rate hike here, and it might push up to this 3.75 area, or it might be just a little bit over anticipate, and we could see it come back down and possibly test this level at 32.48 or 3.25 area. And looking at this 10-year weekly chart of the US dollar could come down and test this 103 level here if we see the weaker dollar continue to move down. We saw this down here back in early 2020. And on this daily chart of the US dollar, we see it is putting in an indecisive spinning top type of candle on Friday. So it's definitely gearing up for some sort of announcement from the Fed for the coming FOMC meeting here. Again, basically looking at this 103.20 level to see if it comes down, would it find support and bounces back up. Now, I wouldn't be surprised that the dollar will come back up toward this 109 level here. And here we are looking at the 10-year weekly chart of crude oil, and see crude oil came down and booked at 76.70. So right now it's trying to come into this high volume area. And if it dipped below this composite value area high, we could see price start migrating down toward this, 50, between 50 and 60 area, and we might be even see 50. And that's probably when the U.S. economy is really into a deep recession here. And that's probably where we will see oil come back down to the 50 level. But if it decides to bounce back above this 76, 70 area, then we could see oil come back up above 90. And if we take a look at this daily chart here, so you can see if oil dip below the 70 level here, then we could see it start working itself down toward this area, maybe in the $64 range, $64 area, and see would it be able to find support there. And if it doesn't, then we could see it come down to possibly to this 55 area. But if it get back above the 76.70, then we could see oil possibly get back up to this 80 area and then work itself up to this 90 location, this 90 area here. And for silver definitely have benefit from the weaker dollar here. You can see that it broke above this 21.22, and now it's getting near this $24 level. So definitely we're seeing silver getting a nice bounce off of the weak dollar here. And looking at the daily chart of silver, it is basically getting above this high volume area, And if it could stay above this, then we could see silver possibly trying to move itself up toward this 25.5 to this area here. And I wouldn't even be surprised to see silver come up to maybe the $27 level here, this area here. So we could see that as a possibility if it could stay above this $24 area and pushes up. And here, looking at the 10-year gold market, the weekly chart, we see gold also benefited from the weak dollar, and right now it's got up above this 1800 level. And if we take a look at the daily chart of gold, you can see it came as close to this 1825 before it kind of pulled back a little bit and closed the week at 1809. So I wouldn't be surprised if it could get above this 1825 here, get above this low volume area and get above that, then we'd be looking at a push toward this 1875 and possibly get up to this 1900 level. But if it get rejected and pushed back down, then look for this high volume area to get retraced, and we probably could see it come back down and retest this 1720 area. Now let's take a look at the daily price action of the S&P 500. As you can see for the S&P 500, go back to the previous week weekly range here, and you can see on Monday it came down and tagged the lower range of the weekly expected move. Then on Tuesday it went below it, and for the remaining of the week it's pretty much stayed below this lower range of the expected move. And right now, we're basically looking at next week's expected move to be another huge week. And we're talking about a range, this range here, of 252 points or so. And also looking at the where it is pricing it, essentially pricing it to fill this gap here on the downside. And on the upside, it's trying to get back above this trend line here. See, right now, if we consider this as a low here and this is as a high, then definitely this week we had made a, the S&P 500 had made a lower low here. So if it could push back up, let's say, for example, next week it get back up above this 4,000 level, but unable to get back above this trend line or into this zone here and start pulling back. And if it dips below this 3,906, that's basically at 3,900 level, then we essentially have put in a lower low and a lower high, and that is a trend reversal from this, basically a higher high, higher low type of a move here. So we could see that if the CPI of the FOMC meeting or Jay Powell press conference, say anything that kind of shock the market, then we could see the market come down to this level here for the S&P 500, down here near this 3780 and 3800 level. So for next week, the upper range is between 4075 and 4060.50, and for the lower range is 3008 and 3780. So those are the ranges, and that entire span between the upper and the lower range is somewhere around 250 point swing. It's going to be a wild week with the FOMC and the CPI. So definitely have to be sure to manage your risks. So for the upside for the coming week, I can see that if it could come back up to this level, and if it could not get above the upper range, in other words, get above this 4100 level, then we could see it move back down. But if it could get above this 4100 level, then we could see it possibly work itself back up to this 4200 area, and that would totally destroy the bears' confidence in taking this market down if it could not prevent the bulls from taking it back up to the 4100 level. But if the bear could push it down below this 3906 or below the 3900 level and get it down to fill this gap, then definitely the bulls will probably start giving up and start capitulating and have this market come down and possibly work itself down to retest this October low. So those are the scenario for the coming week for the S&P 500. And looking at the NASDAQ 100, you can see the NASDAQ 100 also came down on Monday. It tagged the lower range of the expected move. And for the remaining of the week, it also stayed pretty much under it and sitting down near this area here at this 11,500 area. Okay, so for the coming week, the range that we are expecting from the NASDAQ market is between 12,080 and 12,010. And for the lower range is 11,117 and 11,050. So the entire span, the swing is almost 900 points. So be careful, people. This is going to be a wild week with the FOMC and the CPI. So for the coming week, what we want to see is will this continue to push up and get up to this upper range of the weekly expected move? If it could, then watch for this trend line as will pose as a resistance and also this zone. If we could get above this 12,200, then we could see it possibly move back up to this 12,400, 12,600 area. But if it could not come up and take out this upper range and start a retreat back and dip below, as you can see that the market is pricing in a gap fill on the lower range. So then it could come down and fill this gap and work through this range here, this lower range, and possibly come down and test the October low, similarly to the S&P 500. And that's what the market is basically pricing in for a possibility of this gap fill on the downside and pretty much coming back up to this trend line here on the upside. And looking at the Russell 2000, we see the Russell 2000 also made a move back down and getting near this 1786, 1775 zone here. So for the coming week, if this continues to see weakness, we see that it's coming down to fill this gap. So get down to this 1775 and see would it be able to find some support and then pushes back up and test this trend line for potential resistance here. If it could not hold the 1775, then watch this level here down at 1750. Now for the upside, if it could come back up and take out this trend line, get back above it, then we could see it possibly push up to this 1905 area. And for the Dow Jones Transportation, we see the Dow Jones Transportation also broke this pivot low here. So it's putting in a little bit of a lower low. And we'll see, would it continue to push down to this 13,450 area at this price zone here and see would it be able to get some bounce here, find some support, essentially off of this trend line and also this price zone. But if it could push up above this trend line here and get back above this zone between 14,200 and 14,300, then look for a possibility of it working itself back up to try to take out this pivot high. But on the downside, it break this trend line, then we could see it come back down to this area here near the 13,000 level. And the Dow Jones Industrial also pulled back this week. We see that it's coming down, and right now we're watching this 33,167 area, this price zone here. If it comes down next week to this area, we'll want to see would it be able to find some support and pushes back up. But if it couldn't find support down here and it continue to move back down and break this zone, then we're essentially looking for this thing to work itself back down to possibly this area near this 31,600. And for the upside, if it could push back up above this 34,280, essentially 34,400, then look for this pivot high to get taken out and possibly move up to this 78.6 area here at 35,000 area. And finally, looking at the New York Stock Exchange Composite, also it's been pulling back as well. So we're going to see would it continue to pull back and take out this low here, which is somewhere around 15,070 area, and pushes down below the 15,000. If it could remain up here and get a bounce and push back up to the 15,600, then look for these pivot high to get tested. So those are the scenario for the indexes. And again, just a reminder, be sure to manage your risk next week because of the CPI coming out at 8:30 in the morning, 1 hour before the market open on Tuesday. And then we have the rate announcement at 2 p.m. on Wednesday, and then Jay Powell's press conference at 2:30. So be careful. I'm sure it's going to be a wild week, or at least Tuesday and Wednesday. So good luck, and be sure to smash that thumbs up to help promote this video. Thank you for watching, and stay safe.